The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour, noon until 1 p.m. Eastern Time, Monday through Friday. My pleasure to be here, 877-927-6648. Thank you to our great hosts earlier on. And wow, Tommy Jr., 3-minute update. That was a very quick update. Very good. Thank you. So we're looking at a Dow up 80 at 22,079. We're looking at the S&P at 2473. It's up 9 points. The composite index is up 32 at 63.65. This is interesting. The VIX is down at the 11.33 level. So it goes from the 17s to the 11s, over a 33% decline in less than a week. This is quite incredible. In fact, it was just a few days. What I am really looking at here, and the timing couldn't be more interesting, because I have my final webinar out of my 2 webinar series tonight at 5 o'clock, 5 to 6:30. Still plenty of time to be able to join. Yes, the first one has already been, but that first one was really an overview, looking at things. The newsletter the very next day, August the 3rd, that became very specific. That's what we were really looking at in terms of follow-up. And what I had said is that from the end of July, with the candles that were being transmitted to us, look at this. INDU. This is the Dow. Goes to a leg E in the monthly chart in July. Extends that E in, this is August. And what's really important about this, and what's actually quite fascinating really, is that within the context of the markets, the monthly charts, most of the monthly charts are still very strong. The weekly charts, and in my webinar, I was just putting the final touches to the actual webinar. I always have a fixed program, and then we do an unfixed part of it. I answer questions live, and then you can email me the questions. What's really important is that I wanted to discuss how timeframes can be very intriguing. For instance, the monthly the Dow itself has broken, the monthly chart has broken above all trend line, both the trend line, a very long-term trend line, not the very, very long-term trend line that goes, let me show you, that goes all the way from right there. It goes all the way from 2003, where it was support and then became resistance, and then there was nothing. We didn't even come close to that line until the last 2 months. And now we're touching that very long-term line. And this is about where you can expect some kind of a pullback. Hey, you can have this kind of pullback where you just go along the inside track, merrily along for 2 years, in fact. Just bump once or twice, spiking below, but mostly touching or hugging that line. This is the red line, red dashed line. So this is the monthly chart of the Dow. So let's go back to our story here. The weekly chart, the monthly chart, MACD and stochastics. Stochastics at 96% and flat. That is outstanding. At some point, it's going to go down to the teens, but it hasn't even shown a sign yet of weakness. So the monthly chart so far is very strong. The unbalanced volume is very strong in leg. It actually turns out to be only leg C, even though it's an E in the notation. Look at the weekly chart. The weekly chart says, yeah, I'm okay in the MACD. I'm positive, but nothing like I was back at 21,169, the 1st of March of this year. And the MACD was very high. The stochastic was very high. Now the stochastic is 93%, lower than it was then, but still very good. Relative strength index is way lower than it was then, but still very good. Unbalanced volume is tilting down, hasn't gone to a new high. This is leg D. If by Friday we don't break above 22,179, not we, the Dow, that's going to be a peak D. This is that sandwich effect, which I'm going to be talking about tonight in my webinar. And now what's so interesting is, look, monthly chart, technicals, outstanding. That's the bigger trend. Weekly chart says, yeah, it's good. Not great, but good. You know, a little more than good. Very good. The daily chart had terrible technicals. The MACD broke down, the stochastic broke down, and even now there's a lovely spike in the stochastic, but it's only at 58%. Either this is going to go back to the 80% level with the Dow going to the 22,300s, or it's going to fail this afternoon or very soon. And what we're looking at here is that the on-balance volume is back at the highs, and that's a positive. But the price hasn't gone to 22,179, so 22,082, 100 points away. And what is very interesting about this 100 points is that the VIX index, and that's another thing I'm going to discuss tonight in great detail, the VIX index is at 11.26. Yet again, we've seen the weekly chart spike above the 200-period moving average, the orange line, or get to it, and then within a bar, that's 1 week, it plunges to the downside. Monthly chart, exactly the same thing. I want to discuss this all in great detail and say why there are signs that, as of right now, we continue to not have a bearish market, but a more bullish market, even though it's rotational. By a bearish market, I mean the VIX isn't screaming up into the teens and holding. There isn't bad news that's permeating the market that investors think, uh-oh, we got to get out of this market, as they did this time last week. But what's really interesting is, within the context of the rotational aspect, I'm putting a lot of weight on the SMHs, the semiconductor index, and that I'm going to discuss in great detail, as I have for my subscribers. I'll be doing it again tonight. Why? Because of this downtrend line. This dashed downtrend line from the 88.35 area back on the 27th of July makes a slightly lower high, pulls back even deeper, lower lows, lower highs. All of a sudden, we're going to be seeing a test in the next day or two of both the weekly triangle going to an apex, or we're going to be looking at the daily breaking above resistance, say, I'm going to now tackle the previous two highs, or there's going to be a reversal of fortune as the MACD, which is trying right now to cross positive, suddenly fails and deflects lower. The stochastic is still very weak at 53%. This is a very critical time, as far as I'm concerned, for the SMHs. Let's go on to the QQQ. QQQ is the NASDAQ Power Shares Index 100 trading vehicle, also having a very nice day. And that's the reason why I keep saying the semiconductors led us on the way up, led us on the way down, but on the way up, it failed to make a new high. The Qs and the XLK did, and therefore we had that sharp pullback last week. Now it's going to be very interesting to see which is going to be the leader. How does the SMH, the semiconductor index, help or hurt? Okay, so the QQQ is at 144.75, up 72%. Very nice move. And the weekly chart says, hey, and I've been mentioning this to subscribers all the time, weekly charts have not yet shown any price sensitivity to the weakness, and yet the technicals here in the weekly chart of the QQQ, not very good. Let's just quickly look at IWM. Nothing much to see here, folks. Still looking very poor. When we get back, we'll look at gold, we'll look at silver, we'll look at crude oil, we'll look at the TLT, that's bonds, and we'll look at copper, which had a huge move this morning. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, and I'll be back. Dow's up 83, S&P's up 9.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, let me just write this down, find a piece of paper. Where's my notebook? Here's my notebook. Give me a second. I need to write down a couple of things because I want to put them into the webinar tonight. Of course, as I'm writing, I got to remember exactly what it was I wanted to do. Of course, it's gone. You don't write it down that very second. Anything can happen. Okay. So E-mini, looking at this, leg D in the Chapman wave, 10-minute chart. Nice trend line resistance coming up. Look right there. I'm going to be looking at some of these things that we want to talk about tonight, teaching. I have a little lesson as well, show you how you can use trend lines, how you can use the Chapman wave inside track. Here it goes. Inside track, change the color, and pink or red. I like pink for this. And it says right there, we've just hit a little resistance spot at 2473.50. If it breaks above 2475.50, that's going to be very good action. It starts to pull back. 2471 is the area to hold. This is a very short-term 10-minute. Now, let's go through some of the things. I'd said that gold has dropped a little bit. It's made a peak E. It was almost in a left side, right side price time match. It missed it by a few dollars. Instead of going to 1305, the high of the 6th of June in the daily chart, using the fulcrum of the low that was made, this is a continuous contract at 1210.2 on the 10th of July. That says you would have gone back to that high of 13 in the 1300 area on the 11th of August. Instead, it went to 1298.1, peak E, doji candle, pulls back. I think gold is going to be very interesting here because if it holds above 1258, in fact, if it holds above 1268 over the next few days, but I'm going to say it can hold, it can even go to 12. It mustn't break under 1258, but if it holds above 1258, and then rebounds, and by Tuesday or Tuesday of next week, Monday. Yeah, I'd say Monday, Tuesday of next week, makes a new recovery high, tackles the high of 1305 that was made on the 6th. That's going to be very important because it changes the weekly chart and says, aha, now we've got our leg C in the monthly, a very determined, I like a determined move, breaking resistance in the monthly chart, trying its best to fulfill the premise that you want to get to a leg D, and that says we've started leg C. Now I can say, in terms of the monthly chart, look at this, the monthly chart, if you can break above there into leg C, the higher it can go, the better it is. Going to 1315 would be even better. That would say, yep, we're on our way towards the 1350 level as the next target. Any failure and closing below 1256 in the next 3 to 4 sessions says, uh-oh, H pattern, another H pattern could be pulling back, makes that low that was made back in back in July of 1210 a target. So this is a very important period for a lot of things, and let's do that. Look at silver. Silver, same sort of thing right now. It's pulled back quite sharply from the 17.24 high of the 10th, pulls back to yesterday's low of 16.56. That's on a percentage basis. That's a bit of a move. But today is a much better candle than gold. And I've been watching this phenomenon for weeks and weeks. Silver it's like there's a lag. Sometimes it leads, sometimes it follows, but there's a lag. They aren't, most of the time, they're just not moving together in the same percentages. It's like, what's that tag game? When you hold a rope and everyone runs around and the person in the middle stops and everybody keeps flying along until the person at the end loses their balance. This is kind of what's happening over here. So far, silver is acting today much better than gold. The MACD is still good. Stochastics at 78%. It's okay. But this is going to say that the magnet of 17.18, the 200-period moving average, is really very strong for silver. It would take a move below 16.20 to really start to disintegrate the technicals. So let's go to copper now. Look at this. An amazing move. Look at that. A new leg E in the daily, a leg D in the weekly, and its extended leg D in the monthly chart. Very good action. So let's look at JCC. Is that JCC? JCC? No. Someone asked me. Oh, FCX copper. FCX. This is Freeport McMoran copper. Nice move. Very good. Up 84 cents today at 1481. Yeah, I think it's going to start leg C in the monthly chart, a weekly chart, and that would be about 1527. It's at 14.81 right now. So the real serious resistance is going to come right there at the top on the 26th of July at 1527. Can it break above there, close above there, and keep going, or will that be one of those? Maybe it makes a nominal C and then it has to come back and test support. I'm not sure, but right now the technicals are weak, but the price is strong, and that's really good because, like a slingshot, you can have the technicals then confirm the rally, and that would be very good because it'll allow a little bit more on the upside. Question I had about Home Depot. Home Depot trading right now at 152.53, up 2.36. Made a peak D in the daily. It's made a peak F with lower lows and lower highs, and it's made a potential F in the monthly, but I'm going to hold off on that. I'm just saying the monthly chart so far is holding about 147, which is the 9-period moving average. Let's just leave that as it is. The question is this a good time to short Home Depot? And I'm going to say, looking at HGX, which is the Philadelphia Housing Sector Index, this bounce is quite good. The weekly chart had a horrible candle last week, and now it's bouncing. If you look at wood, which is the global timber and forestry ETF, it's made almost an island reversal, not quite. On the upside, acting quite well. I'm just going to say, give me a day or two. Let's look at Home Depot again because it's been a monster, but it started a huge consolidation. I think you're absolutely correct that it's going to be pulling back, but I want to give it just a little time. Or the only thing I could say to you is if you use options, if you want to buy a 147.5, if they have that put going out 2 months, I'd say, yep, that's another way to do it. Just to start a position, give it a day or two. I don't think you're going to lose much. It's a matter of whether you're correct in getting in on the short side. A question about, I want to do TLT. The TLT, which is the Lehman 20-year Treasury Bond ETF, up zero. It was up a little. Now it's unchanged at 125.25. The weekly chart is suggesting that a push above 126.50 is needed, $1.25 from here, to really confirm that it's going to go to a leg C on the upside above 128.57. And if there is a decline below I said 124 to subscribers in my opening call, Traders Corner. I'm going to say 124.10 to 123.80 is going to be really critical support. A break below that says, oops, be careful. you're going to go straight to the 122s, and that'll see rates rising. So this is going to be a fascinating period. I want to do a couple of other things here. The crude oil. Crude oil, now this is very interesting. Crude oil is down 37 cents at 47.17. I call that a peak C1, C2 at the 200-period exponential moving average resistance back in early August. And what I was looking at was if the 9-period moving average became support or resistance. Right now it's resistance in the daily. The weekly, it's just slipped under the 9-period moving average in the weekly chart. Lower lows and lower highs. I think crude oil has a problem. And we'll see. I think it's still stuck between the 51 area and the 45s, 46 to 45 as support. So that's why I'm looking at it right now. Got many other questions. I'll be back. Basil Chapman, Tiger News Hour. Dow's up 79. S&P is up 9.7. Good move.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So tonight is the final webinar, my 2 webinar series. The reason why I'm going to make a bit of a deal about this is because we were looking at certain requirements that I had in monthly charts. And then I wanted the first 2 weeks of trading in the daily charts to start to give me a sense of what we're looking at to see whether or not I was correct in assuming that the monthly charts were so strong that we could have higher highs in 2017 and that there was a chance that yet again we might have a rotational correction, and that rotational correction could keep the market buoyant as previously favored areas became unfavored, and unfavored areas became favored, and that kind of kept the scales of justice, as you know how it is. You got the left side, you got the right side scales. You want to keep it in balance, and that means you got a high level consolidation. When it's out of balance, you get those 15 to 22% corrections. So far, it seems to be in balance, and we've seen that really in the Dow, because the Dow, even yesterday, you had you had Visa, you had the MasterCard, you had American Express within the Dow running strongly, and you had oil weak, the oil multinationals. So that's really what Home Depot was very weak. So in the Chapman wave, the concept is simple. You try to look for the lowest low, and you try to get in that low, and then you want to ride A, B, C, 4 higher peaks at the 4th highest peak labeled alphabetically in sequence, uppercase, A, B, C, D. You can go to E, F, and G. D is where other things can happen. Just keep it as simple as possible. So we're going to be looking at the time frames. We're looking at what seems to be working, what is retraced but could in fact try to make new highs, etc. And what are we going to do? Within that context, I always like in my webinars to have at least one, maybe two stocks or indexes or something that we're looking at really closely based on the Chapman wave methodology to decipher, to say, this is really what you want to learn. It's a work in progress. It's a study work in progress. Therefore, you're going to be using something that you've actually purchased and use it as a tool, a learning tool. That's the best way to learn. So within that context, we on the 2nd, we discussed it. On the 3rd of August, we bought it, and that was TWO, which is Two Harbors Investment Corporation, REIT management firm. You look at the monthly chart, it made a peak E. Hey, peak E, you want to buy after a peak E? Well, the MACD, the moving average divergence was looking very good. Stochastic at the time was pulling back, was still in the 80s, in the 82, 83% area. That's still very good. So that said to me, okay, probably a left side, right side price time match. If there's anything that's going to work, that makes that target on the left side, $11 made in March of 2015, a potential target. But first, you've got to get through the near term, which is 10.54. So we got in, let me show you right here. And then the weekly chart, peak F top. And you come down sharply with the MACD and stochastic very poor. But wait a minute, when we looked at it 2 weeks ago, it was just flattening out in the stochastic, and the on-balance volume was still not bad. So it said to me that the arch formation, which we've seen so many times in these stocks and indexes, could be a reflexive move to the upside that could garner momentum if the daily chart was successful in the pattern that we recognize. Now, it's even worse because you've got a gap down from the 21st of June. It goes to 10.51 at peak D. On the 27th, it opens at 10.44. That is the high, and it slumps down to 10.19. Then it gaps down the next day. Nothing worse than a gap down after a horrible session. Gaps down. The high is 10.07, and it continues down until it goes to 9.58 on the 19th of July. Then it starts an H pattern that's successful, breaks above it. Suddenly there's a cup formation. And I love when you've got stocks that have had a gap that gets filled and it just goes merrily along its way after a downside gap with bad news or whatever it was that affected it. Hasn't done that yet, but that was the potential I looked at. Then I did a left side, right side price time match, number of bars to the left, to the low. Nope, that didn't quite work out. I had to use the first peak A, gray A over there, and it gave me a left side, right side price time match to the 15th. That was yesterday to get to where? To get to the high of 10.15, the high of the 5th of July. So we're in over here. It drops a little bit. Then there's what's called the Chapman wave Roman candle, a successful one, a green one, more at the lows than the highs. At the highs, it's very negative. At the lows, it says, hey, you close above that Roman candle high 2 out of 3 times, you should be going higher. Well, that coincided with the MACD moving higher, the histogram, that's the vertical lines, and the stochastic in the MACD moving higher, the on-balance volume running up very sharply. And so what we got was peak D yesterday. What is your objective? To get to a D. But the 9-period moving average, the black line, I'll be talking about that tonight as well, held so strongly that it became a springboard every single day. When the market was trying to pull back, it was resistance up until the 7th of August. And then all of a sudden it became support. And now what we're looking at is a beautiful candle. The day's young. This thing, believe me, during the day, you can move up and down sharply. So I'm talking about this now at 20 minutes to 1 o'clock Eastern time. And it's up 6 cents at 10.12. Could be anywhere, but within another half hour. That's the way it moves. It has intraday little bumps and grinds, all within very tiny percentages, but it can change the pattern quite considerably. Meantime, what it's done is it's gone halfway into the wick of the candle of the 14th. It's just above that, which says if it can go even just another 30 to 40 minutes, there's a chance it might test the high of 10.14 today and break it to go to 10.15. That will achieve most of our targets. So that was our study and work piece that we had. That's the way we like to look at things, in a very technical way. There's the left side, right side, Chapman wave inside wedge, which says that's the one that said that by the 15th it should hit the 10.15 area. It just missed that. It went to 10.14. So we're looking at this and saying, okay, let's see what you can do now. But what's really interesting about this is that the weekly chart, if it can get into the 10.20s by Monday or Tuesday, that would suggest that the monthly chart has a chance to move to the top of the range, and that would be that 11. That would be 10.54 at least for this move. That would be a spectacular move, just as a study piece and a work piece. And then you'll learn to go from daily, 120-minute chart actually was our first, and 120-minute chart still needs a leg C above 10.14, and then it should go to a D. So this is a great study piece that we've been working on and trading. Well, I wouldn't say trading. This is a position play at this point. Hopefully the weekly continues moving higher, and we can treat it now as a more intermediate term buy. If it goes even higher, then we can go longer. If it breaks down, we're out. That's all there is to it. So I wanted to just give that to show what you get every day. You also get, for instance, here, I said in my overview section, this is what you get, like the third chart, fourth chart that goes out is my overview. And that tells you right here, I say what we're looking at. Copper is holding really well, a positive, to be discussed tonight in the second webinar. If at 11:10 a.m. the Dow is plus 60s, the S&P plus 80s, the Composite Index plus 70s, that will all go well for the close. Early strength that falters and sees only a modest rally at that time, or weakness, is poor. And I like to do it every day. You know what to look for. I'll show you in the VIX index what to look for, etc. We'll be back straight after these messages. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. So there was a question about that 120-minute chart I spoke about in TWO. You see, look, here's the 120-minute chart. It was very strong resistance in that whole period of June 21st, 23rd, even into the 27th, and then it broke down. But look at this beautiful cup formation that's forming both here and the daily chart. Of course, it always starts in the smaller time frames. And we've got a nice ellipse on that right that's moving higher. So all I need to see to go to it, look, after a G, this has to be an A and that has to be a B. There's no other way I can count this. It's going to abort and just break down all the rules because of the 200-period moving average. It finally broke above instead of being below. But now it's trying to cheat that as a springboard to the upside. And I'm looking to see a leg C above 10.14. It could be 10.15. And then it pulls back. And it can even go to a leg D at 10.16. Pulls back and makes a peak and then another slightly higher peak. But it does say that you're starting to get the ellipse turn in the 200-period moving average to the upside from the downside. So a lot of this is saying, yeah, this is nice action. This is very good action. That's what I wanted to clarify. So let's get out of that. I had a question about, did I look at FCX? I did. FCX, Freeport McMoran. Yeah, so I said this is the pattern that we often look for. This is the cup formation right here. I like to draw that in right here. This top part here can have a left side. That's a little too quick, but I'm going to make a left side, right side price time match, which say that it should hit. Wow, that's really quick. The 26th of July, 1527 was the high, and it's at 1481. It should hit that by the 21st of August in a cup formation. But if it pulls back from here and goes under 14.40, 14.30 support, then you're looking at a rectangle finally rather than the bowl or cup formation. Let me just clarify what I'm looking at here. So that'll go to that midpoint. That's the plumb line right there. Now I'm going to go to the right side. And it says it better just keep rallying. Maybe it's today it should close near the high and tomorrow it should gap up and move higher. And that'll start leg C if it can go above 1527 in the weekly chart. I hope that clarifies that. Now, the next thing that we're looking at was, the OSX. Let's just look at the OIH because that's a little easier for me. It's already notated down. 21 cents at 22.14. It really looks ugly. This market vector oil service went to a peak C, repelled at the 200-period moving average monthly. It's almost got a left side, right side price time match. Let me just do that so you know what I'm talking about. I've already done it. I've already done it once in the weekly chart. Let's do it again now for the next level of support. I'm going to go all the way. I'm going to make it nice and big so you can see what we're looking at here. So I'm going to go to the doji candle. First, the doji candle. right there. That's a little tiny candle right there. And that says most indecisive moment. So I'll go there first and say, if that's the case, new parallel goes to green. That can take you to the week of the 22nd of September. This is a weekly chart in which there's a chance that it's going to hit 20.46 and it's trading at 22.14, another 20% down. And this is exactly what I like to look for, the confirmation in Chapman Wave inside wedge target. So this is the support zone. At any point in the weekly chart, it could hold, in this case, 21.78, try to bounce, but it looks like this is treating this as a slalom race and it keeps bouncing to lower lows and lower highs. Okay, so that's the OIH, which is the Oil Service Market Vectors ETF. Now, I think the Fed does something at 2, or there's something, the beige book is discussed. I'm watching this closely because if there is a sharp pullback, Dow's up 80 points. I want to do this right now. Dow's up 80 points. Let me go to the Dow. INDU. Up 80 points. Very nice candle. Very nice move above the 9-period exponential moving average with a gap up off a low is really important to monitor. It means that there's, it's like a wound up spring and it just like a coil. It just ripped to the upside. And it hasn't, in 3 days, it hasn't even looked back to fill in the gap. That's usually positive. But if there's a close in the Dow at any point in the next 2 days, if there's a pullback and the Dow's only up 20 points by the close, I'm saying these are the parameters I'm looking for. And you want to see the Qs and the semiconductor index and the XLK, the select tech stock ETF. You want to see them pull back quite sharply. That would say to me, we're starting to look at this pattern right here, which I drew in for subscribers. It's actually gone a little higher. When it goes a little higher, I've got to respect that and say, just a leg aim, we're already there. This is going to be very important for the end of the day. The MACD is still struggling, but it is turning up, but it hasn't crossed positive, and the stochastic has opened up with a nice distance between the 9-period moving average, the differential, and the slow-moving average. That, to me, is a good sign. And the on-bounce volume is really working well. So that's just saying that this is what we were looking for in the daily chart right here. This is what we were looking for in the 120-minute chart, a Chapman Wave 5 to the upside, maybe fading at a peak C. Doesn't matter. This is the area where we're looking to see what happens. I said to subscribers, a close above 22,050s, but 50. I can't remember if I said 50s or 50s. 50 or 50s, let's just say the 50 level, would be very positive. I would have to just say, this is really good, especially if accompanied by the others moving higher. So I'm looking at this, and those are the parameters I'm looking at. Let me make it real clear. It's at 22,073. A close near 22,100 would be very positive. A close nearer 22,020s says, you've got to be careful. With the VIX so low, you should be much, much higher. You are higher right now, but you should be closing much higher. So that's going to be very important for me. Here's the VIX near the low of the day, 11.43. Days young. Let's see what happens. Now, I want you to look at the IYT. We'll be doing that again tonight. This is a nice move up in the IYT, the iShares transportation average. And that says if it can, at 169.78, by Tuesday of next week, if this index is above 172, very good action. If it's below 167, very poor action. Let's go to Scott in Safety Harbor. Scott, how are you?
I'm doing fantastic, Basil, and I tried something that I've tried 2 or 3 times before in the way of shorting. And, there must be a spiritual element. There must be. I just don't do well when I do anything negative. I tried shorting 2 times in the last 2 years. I lost a tremendous amount of money. I emailed you about the VIX. I'm right. Down about almost $40,000 on that.
Wow.
So, you know what? It's just something against my mindset. By waiting around for something bad to happen, it just doesn't jive with me. I've managed to accumulate double 7 figures here in the last 5 years, and it was all with positive momentum. So people can laugh at me. Oh, you can make money on the way down. Well,
Scott,
I can't.
Scott, let me just tell you something. You've just, in a nutshell, done a description, a psychological description of something that I consider to be really important. Understanding what you do well, repeating it over and over, understanding where you're not so good, trying to avoid it. I'll be back. Hold on, Scott. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi folks, we're back. Just wanted to show the 10-minute chart. Remember that PT over there? Here's a PT, there's a PT, here's another PT. Pulling back, we're at that 2471, 2470 level now. Let's go back to Scott. So Scott, I first of all want to commend you. I know that over the years, you've had a systematic approach. When you've deviated from it, unless you're really working it and doing well in it, you tend to say, all right, it isn't working, I'm going back to my other style. And this is just one of those cases. So it's really an incredible learning experience. I always like to say we all pay our dues. We go from getting a master's degree in the School of Hard Knocks to a postdoctorate degree. You're always learning. And this is kind of the process. And I think that for understanding your mentality, being able to sleep at night, being able to repeat over and over what you do well is really to understand what you're doing and to be able to repeat it is a very admirable thing. I like that. I like to hear it. And I like the fact that you tried something, didn't quite work. I bet the next time you come back to shorting, you're going to have a slightly different approach, and you probably will start to do much better. But don't treat this as a great learning experience.
I'm not going to short again.
And if you don't, there's not a problem in that. You know, when I first started, I did no shorting whatsoever. I only bought, and I used to sell when I found that I was really distributing by giving away some of my gains because the market wasn't going anywhere. I said, whoops, I'm out of here. I want to keep my gains. And I waited for a major pullback, got back in, got out when I started distributing again, and I just kept doing that. That's the way I learned, and I think and I never shorted. When I did short the very first time I started using puts. I had a very big learning experience there, I can assure you. So yeah, this is part of it. And if you don't short, there's not a problem at all.
I got crushed when I started using margin one time. I mean, it was just awful. You know, some friends of ours have a cat had a cat that was 21 years old. They have a new cat now, and I noticed he's a trader friend of mine. I noticed the other day they had some food. I said, that's not the same food, is it? Oh, no, we're going to try something new. And I'm thinking, your other cat lived to 21. Why would you try anything new? And then I'm thinking, well, I did the same thing with the stock.
Oh, that's it. Hey, Scott, call again. Tell me how you're doing. Thank you very much. Folks, come to my webinar tonight.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.